Good morning, good morning. How you guys doing? Nice to have you. Happy Valentine's Day. It's Valentine's Day, isn't it? Believe so. February 14. Got the little lovebirds here on my search engine, so I think it's Valentine's Day. And today we're going to take a look at we're going to look at gold, we're going to look at silver, we're going to look at the major currency pairs, and we're going to take a look at what they've been doing, see what has transpired since our last session. And yeah, we'll take it one step at a time. First, we're going to start by taking a look at gold. We've had our CFTC projection target for some time now. I showed you how I got that target, basing it on the CFTC data. We took a look at the positions that the institutions held on their longs, and we took a look at how much more they could add before maximum size was reached, and what that looked like on the daily chart. And so we did our projection, and we came to our target here, 29.69, and so far it's falling short of hitting it, but there's still room for price to continue moving. Today's a big day. We got some CFTC data that's going to be coming out, and so we'll look at that. We definitely think that long positions are going to be up for gold for sure, because there's no way that price was able to rally up this strong without the institutions increasing their long positions. So we're going to wait for that data to come out. And when it comes out, I'll report it. If you're not in the Telegram channel, you should get into our Telegram channel. Where's the link? You can go to whiteoakfx.com, okay, whiteoakfx.com. Scroll down to the bottom of the page, and you'll see the link for our Telegram channel. And go there. I'll send all the updates there throughout today, and also next week. If you want to, participate in what we're doing, locating institutional supply and demand zones to increase your odds of trading and being successful, come and join us and see if you can add our analysis to what it is that you're already doing. All right, folks. All right, good. I know you can't see the chart. You can only see me. Hello. I will bring that down. Don't you worry about that. All right, so welcome again. Let's shrink me down just like that so we can take a look at the charts. There. Okay, better? Now you can see everything. All right, so let's take a look here, folks. Let's look at what we got here. First of all, we look at the daily chart. We see just a little bit higher, just a little bit more, and then we reach that target. So what's going to happen when we reach that target? Well, what's likely going to happen, I can't tell you exactly what's going to happen, but what is likely going to happen because of the banks reaching their maximum size at some point around this area, they're going to have to sell off those longs. And when they do that, it's going to cause price to drop aggressively. Okay. Now you can see what happened back here. Price tested an area of demand, and they bought again, which is causing price to go up. On the way down, because this is an area that's already been tested, it will likely break through when price drops. Okay. And then the next area of demand is down here. Okay, there is also another area of demand here on the weekly chart that is just currently in the process of being created. So we could see price stalling out down in this area. So that's around the 2.8 area, give or take. We could definitely see price stall out at that point. But I would be looking at the CFTC data to see just what they're in the process of, because I think longer term price can go higher. But when they've already maxed out their long positions, it's not going to go higher. It doesn't matter. It doesn't matter what's happening in the economy. It doesn't happen what's happening in the news. It doesn't matter how many retail traders think gold is going to continue going higher. It won't go higher because the banks have maxed out on their long positions. Okay, and see, that's a major advantage that we have over those traders that don't look at the CFTC data. I don't know why anybody would not want to look at it, because it's basically telling you what you need to know. But again, if you haven't studied the CFTC data and you don't know what to look at, and you haven't looked at what has happened in the past and compared their positions with price action, then you'd have no idea that there's even a maximum size that the institutions will reach before price reverses. I see a lot of headlines out there that are extremely bullish for gold. I see a lot of people talking about gold, ready to shoot to the moon. And, they have absolutely no awareness that this is going to come to an end. Okay. We're very close to the 408,000 maximum size that they have. And if you look historically, every time they get to a maximum size, they tend to take profits, which shifts price to the downside. So be very careful listening to people telling you gold is extremely bullish. It has been bullish, okay? It has been bullish, but that's coming to an end, all right? It doesn't go on forever. Once they reach maximum size, they take profits, it causes price to shift down, and that's just how it is, okay? So this is what we're watching on gold. And we had that nice rally, like I said, from this area here. This was institutional buying coming into play. And if you notice, that institutional buying coming into play was enough to help propel silver to the upside. So if you've been watching that, you'll notice that silver has been propelled to the upside. Look at that, okay? That's a nice drive higher. We are watching this area here to see if it was going to hold or if price was going to drop. If you remember, this was an institutional selling area that price had contacted. Well, it just removed it, okay? It just removed it. So this ranging that was taking place for some time here on the chart, okay, came down to demand, up to supply, was starting to head down. Now this is over. This ranging is over. This is opening up for a move to the upside, and this is a good thing. This is a good thing. Doesn't mean that it's going to go up right now. I think it's just setting up for what is to come. Remember, on the weekly time frame, we had that area of supply as well. Okay, that area of supply was holding price down. Remember, it broke a trend line. Then we had demand here that came into contact on the weekly time frame. So that obstacle is broken through. That obstacle is broken through. As far as I can tell, there's no more obstacles holding price down, which tells me that this is setting up for a move higher. Right now, not necessarily, but it's setting itself up for that, okay? So I think if we see a big sell-off in gold soon from profit taking in longs, they could retrace price to older areas of buying that exist lower down the chart in the 28 area. If they take a massive amount of their long positions off for profits, they could start reaccumulating at a lower price and start building price back up again. And with that said, this could be, setting up for a massive move to the upside when that does take place. So I think it's very possible that that's what's going on, extremely likely, and so that's what I'm going to be watching for. Let me just take a look here because I'm looking at the chart and I can't help but notice something. Okay, yeah. All right, so this is looking pretty good. I mean, once again, let me show you this chart. Okay, we had supply that was contacted back here. Look at that. Supply was contacted. It drove price to the downside. And now we're heading back up. Buying pressure is the driving force. Okay. So when significant demand comes into play here, it's able to drive price back upwards into that area that was selling previously back here. Now, because selling has already taken place from this area of supply, it's likely that when price gets back up to the selling area, it's not going to hold the same amount of strength as it did previously. So it will likely break and cause price to go higher. All right, that's what I'm watching for. So silver's looking pretty good here. Okay, looking very good. Now let's look at the dollar. What's going on with the dollar? Weakness. Have you seen that? Weakness across the board. Now I was putting out warnings there that supply were coming into play, supply. And that even though we had some signals of price moving higher, okay, because some significant supply areas on higher time frames were being removed, like for instance here, 6-month supply being removed, it was giving us a sign that over the longer term, pressure will be to the upside because they're removing areas of supply. But we had evidence to suggest that price was going to drop because we had short-term and medium-term areas of supply holding. So as you can see, supply is coming in here. It's coming in here after a test here, a rally up, tested that supply, and now we're seeing the weakness coming into play. So that is the dollar. Let's go to US CAD. Look at US CAD, okay? Same thing with the US CAD. Supply. Remember that big spike up? It spiked up into where? Supply. So this was one of the charts that I was looking at that was just screaming to me that medium term and short term we were going to see a drop because all these supply zones were coming into play. All right. But I want you to pay attention to the monthly time frame because we have a drop taking place right now, but look where it's dropping into. All right. We have a drop taking place right now, but it's dropping right into an area of demand. And when price hits that demand zone, it is likely, very, very likely, going to cause bullish pressure, okay? Which is going to cause price to rally up from that area. So be watchful of that as things unfold, okay? US Swiss, there's not much going on with US Swiss. I told you it's just going to move alongside the other dollar pairs, and that's exactly what's taking place. As you can see, it contacted several times this area of supply here. 1, 2, 3. Now it's dropping down into this tested area of demand. It still has room to drop. How do I know that? Well, I just showed you on the US CAD that it has room to drop until that significant area of buying came into play. So, so that's why, all right? So I'm expecting more weakness out of this one. Now, US dollar, Japanese yen. Have you seen that one? This is a beautiful chart, isn't it? We rode this one from down here to the upside. I told you, get ready for a long. I told you this was going to rally, right? I told you before it happened. I told you when it was down here, I'm expecting a move to the upside, okay? And where did it move to? To our supply area, okay? This is supply and demand at its best. Demand gets contacted, it shoots price up to where? Supply zones, and then it shoots price down to where? Demand zones, and then it shoots price up to where? Supply zones. It's just you have to determine what time frame supply and demand zones are going to come into play. All right, this is the path that price moves. It doesn't just go from one supply zone to one demand zone the same time frame back and forth, because that would just be ranging, right? Eventually supply zones have to be taken out. Eventually demand zones have to be taken out. It's a buildup of momentum to eventually get to a destination, right? So our job is to locate that path that price is going to take, and if we can locate the path, then we can ride along that path and take trades that, you know, hopefully make profits. So in this situation, we have that really nice move to the upside that we took advantage of, like I said, from down here to up here. And now we got that drop from the area of supply. So what were we just looking at with in terms of the US CAD? That it had room to drop until that demand got contacted, okay? Well, if you take a look here on the weekly time frame, we got demand here, okay? That's in play right now. Price doesn't need to drop because it already has demand in play. So what do I think is going to happen? I think that it's very likely what we're about to see is that US CAD is going to continue dropping until it reaches that area of demand. In the meantime, we're likely going to see more weakness here in the US dollar, Japanese yen. But even though we're going to get some weakness, I still think that this demand here is going to hold, all right? And then when the US CAD hits that monthly area of demand, wherever this is within that area, we're going to see a strong rally form from it. Okay, that's what I suspect is likely going to happen. Okay, so I'm going to be watchful of that as things move forward. Let's go to the Aussie US dollar strength. Okay, remember I told you demand is in play. Okay, I told you demand is in play. We're likely going to see a rally up. Okay, and look what's happening here. You notice how this is like the opposite of what's happening on the US CAD. I want you to pay attention to that because those market makers that move price, they do so, and they do so in a way that is all correlated with each other. Okay, if significant buying is taking place on one currency, uh, it's usually happening on another, unless there's a reverse correlation, and then in that case, they're selling. So US CAD had significant buying taking place on the monthly. On the Aussie US dollar, we have significant selling taking place on the monthly. So I love charts like this. I love them because that tells me that price is likely going to continue rallying here on the US Aussie US dollar. It's going to likely continue rallying. We have a supply zone being contacted right now, but that is likely going to be broken through, and price is going to be heading up into the 65s. Okay, and then once price heads into the 65s, there's going to be some accumulation of a short position, and then we're going to see price reverse. As that takes place, US CAD is going to drop into that monthly area demand, and then eventually accumulation, and then price is going to shoot up. So obviously we're going to be looking at the CFTC data because we're going to be looking for signs of this accumulation of that short as the Aussie heads into monthly supply. And with respect to US CAD, we're going to be looking for accumulation of a long position when price enters into that area. And if we start seeing that, those are our signals. I'm going to look for the technical signal on the charts. Go down to a smaller time frame, look for an entry on that, and then I'm going to ride the wave because as far as I can see it, when price sits there, we're likely going to see something like that. Likely, okay? So I'm going to be watching for that because remember, dollar pairs have, on some dollar pairs, they've removed substantial supply areas, opening up the door for a move higher, okay? So that tells me that over the longer term, we're going to see a move higher. Short-term drops, just as we're getting right now. So if this rallies up to that supply, there's no reason for me to not suspect that we're going to get a larger drop, okay? You heard it from me first. Euro. So remember I was in short and I exited my short? Yeah, I did that because of all this evidence suggesting that we were going to get a medium-term move to the upside. So I didn't want to hold a short if there was going to be a medium-term move to the upside. So I got out down here, right? Nice timing, right down there at the lows, all right? So now we're getting the push up, and I'm going to be timing this with the Aussie, with the US CAD. When I see their reversals take place, I'm going to be looking for structure showing me that reversals are taking place on the euro, and then I'll get back into my short position. Okay. Let's go over to the pound US dollar. Remember I was telling you about this one? Do you remember? Okay, well, pay attention to what I'm going to show you here. So I was telling you that price was entering into an area of supply. And technically, it was a nice area to go short. The only thing was the evidence that was suggesting there was going to be upside pressure, okay? So with that evidence suggesting that there's going to be upside pressure, I said, even though this is a really nice area of supply, it looks like it's going to be taken out. And let's take a look at where price is. Look at that on the weekly time frame. Look how close it is to being removed, okay? So just because technically it looked like a good area to go short doesn't mean you should go short. And this is why looking at the correlation in the markets is so key, because technically one chart may look really prime for a move to the downside, but if the other charts that are correlated with it are suggesting that this area is likely going to be broken through, you can't take a trade based off of that. So, so I'm holding tight. This looks like it's going to break through. It looks like it's going to shoot price to the upside. Okay, it's about to happen. It'll likely happen today. And then if we head higher with some strength, we have another area of supply up here. And this is an area where I suspect price could reverse from. Because remember, US CAD dropping into monthly demand, right? Aussie rallying up into monthly supply, right? So it's very likely that we're going to see a push up into this area of supply. And then I'll be paying attention to the CFTC data. And if I see an accumulation of a short, this could be the area that we're going to see a reversal to the downside. Okay. So this is what I'm going to be watching for. Okay. Hey, if you guys like this information, if you find it useful, please hit the like button down below. I appreciate it. Okay. And thanks for all your support, by the way. I've been seeing all the support that you guys have been giving me, and I appreciate that very much. If you have suggestions on things that you'd like to see, leave them down below in the comments. I'll be reading those comments after. If you have suggestions of different markets or whatever you'd like to see me cover, just leave comments down below. I always enjoy reading your comments. All right. So last but not least, we got Kiwi US dollar. Remember, we were talking about this area of demand here and the pressure that it could be putting up. Now you're seeing the pressure build up. And we're going to likely see a continued move throughout the day here. Okay. So where's it going to stop? Probably in this area here. And then we'll see a reversal. This is not the greatest looking chart in terms of supply and demand dynamics, so I don't spend too much time on it. It's not something that I would be trading. I see one of you would like to see Bitcoin. Sure, we'll take a look at Bitcoin. Take a look at what's going on here. Nothing's going on. Nothing's changed, okay? According to the daily time frame, we still have the same thing. Nothing is expected to happen as long as these two areas hold, period, okay? You have a demand zone here where buying pressure has been coming into play. Okay, and you have a supply zone at the highs here where selling pressure has been coming into play. And so this range is holding. Now, it's likely over time that the demand zone is going to be the one that's going to break through, right? Because there's like two walls. Running into one wall, running into another wall, running into that wall, running in. Eventually, one is going to break. They're getting weaker and weaker. Eventually, one is going to break through, and that's where price is going to go. Now, because I have selected, remember that? Most likely reversal from here. Remember that? I put that on the monthly time frame. Pretty crazy, right? And look where we hit. Okay, a few pips. Look at that. Did you see that? Look at that. 110. Crazy. I mean, that's just crazy. You got to admit it, right? I put that target there when price was just breaking through into the hundreds. And we did an estimation, and we came to conclude that 110 was likely the reversal point. So if somebody told me you have to bet right now what direction Bitcoin's going to go, I'd have to say, it's likely that the demand zone is going to break. Okay. At some point, I don't know when, but over time, it's likely that the demand zone is going to break and price is going to drop. Okay. That is the odds. Okay. So, if you like to take risks, I don't like taking big risks, but if you like to take risks, I would be looking for shorts up in this area. Okay. Any type of rally up back to that area, I'd be looking for shorts and putting my stop loss above 110s. Okay. And then close your eyes and go and ride the wave. Right. So that's what I would be doing if I was willing to risk. And personally, I don't trade things like this. I find them risky because there's nothing stopping price from breaking up to the upside. I mean, I'm telling you that the chances of the drop are pretty high, but let me just put it to you like this, okay? So I would say the chances of a drop and breaking through demand are probably about 80%. chance. And that's good. You know, I think that's pretty good. 80% chance for a drop. Okay, I think that's pretty good. But there's a 20% chance that it doesn't drop. Okay, so if 80% chance of dropping is good for you, and you're not worried about shorting at the highs of the range and then putting a stop loss above 110. I mean, what do you think? Just think about this for a second. What do you think what happened here? Why do you think there was that massive spike up to 110? Okay, it's because when price dropped back here, a lot of people shorted and put a stop loss above that previous high. So what did they do? They rallied price up and hit everybody's stops. So, you know, these type of ranging situations are in most of your textbooks, okay? Your conventional trading textbooks show you these ranges, and they say when price goes to the highs, short up there, and then you take profits at the lows of the range, right? But don't you think the institutions know this? Don't you think their algorithms have been programmed to grab liquidity by, you know, putting price in these ranges and then jacking price up to trigger losses? I mean, you see it all the time. It's because it's, you know, it's programmed that way, right? So that's why I don't trade like this. I find it risky personally. I wouldn't do it. But if somebody said you absolutely need to trade Bitcoin, um, and it has to be within the next couple months, this is what I would do. Okay, this is the logical way that I would trade Bitcoin. Okay, folks. Hope that was helpful. Yes, I agree, 80% because of that daily demand. Yeah. Okay. All right. How do you mark the areas of supply and demand? That's really interesting stuff there. How do I mark it? Well, there's a tool. It's the I've altered the Fibonacci tool to be able to draw just 2 points, and then that becomes a supply area depending on the color. And I go into my template, I change it to green when it's demand, and so I locate the institutional buying and selling on the charts, and I draw them on my charts, and then that allows me to see what's going on with price. Okay, keep track of all the buying and selling by the institutions. All right, folks, beautiful. Happy Friday. Go get some flowers for your girl, and we'll talk to you later. Take care, guys.